And on today's show, how the laws and regs affect your engagement in the settlement market. Part 4 of this week's series on life settlements with life settlement experts Erez Rotem and Alex Sirotkin of Integrity Life Solutions, LLC. Hi everyone, I'm Steve Savant, syndicated financial columnist and contributing author to Backroom Technician and Innsmark. Let's get down to business. Well, welcome back. Day 4,
Thank you.
Alex,
Thank you.
Erez.
Thank you.
I got to tell you, this is people are like, wow, I can't believe the market's online. We've been doing our show. This is our 4th day. Again, if you're coming into our show today, please go back to Monday, Tuesday, and Wednesday. Watch it in succession. The sequence will really help you understand what we've been talking about. Today, we're going to talk a little bit about, people say, well, Steve, why are we talking about estate planning and life settlements? Well, people always tell me, where do we go to get this inventory? We hearing what you're saying, we're talking about. How can we do this? And estate planning seems to be an area where people have done a ton of work on this over the last decade, and they may have policies that are sitting there. I don't want to say it's in limbo, but maybe it's not as necessary as it used to be. Talk a little bit about this.
I'd be happy to. Actually, as most of your advisors probably are aware, it's more difficult now. I might be presumptuous, but it's more difficult now to sell a life insurance policy. Why? Because the tax regulations, the federal tax regulations have changed, whereby the federal estate tax exemptions have increased over the past several years from 2, 3 to 5 for an individual. We're talking about over in excess of $10 million for a husband and wife. That means if you have husband and wife, a net worth of $9 million, you're not going to be paying, federal estate taxes anymore. So, remember all the justification letters that you wrote. Those things have gone by the boards. That justification isn't there. Those people may not need their life insurance policies for the same reasons, for the same estate planning reasons that they did several years ago. Something to keep in mind.
Okay, so if I have one that I don't need, and how do I unwind this? What if I'm like, I've already put this in an irrevocable life insurance trust, I really don't need it any longer. Am I able to sell that as the grantor or my beneficiary? Who's doing that?
Absolutely. I mean, a trust is a valid seller of a life insurance policy. In fact, my family has done it ourselves. We had an ILET with life insurance policy in it. We had, under different circumstances, but we decided that a sale was logical, and the trust sold it. The money went back to the trust to be disposed of in accordance with the trust document. So ownership is really immaterial. Could be anyway, nothing to do with estate taxes necessarily.
Sure.
It could be a corporation that owns a policy.
So if I want to look at an area where I could maybe do some trolling, would estate planning sounds like this would be aware. I could go back to my policies, whether they're owned by business or owned by trust. For my original reason was estate planning. Now I can go back and look at that. Those strategies and planning may have changed because I think the Unified Credit's like what, 10.6 or 10.5? Married couple, it's quite high.
That's right.
So I have tons of policies. I mean, I would say 5 years back, there must be a ton of policies in geriatric clientele, right, that are sitting there at 5 million, 3 million.
That's right.
That are sitting there doing nothing.
They did some estate planning in their 70s, and now they're in their close to 80 or the early 80s. This is a good time to look at that. Now, listen, this is not for everybody. I mean, life insurance is a good product, and people want to leave a legacy irrespective of the changes in tax laws. But it's really something to look at, and I think we think it's a big issue in the whole life insurance. I mean, why they did this, I have no why the federal government did this when we're so in need of liquidity, revenue, and then suddenly it's one way that they lost all that revenue. But anyway, that's a political matter.
But when I think about it from a strictly advisor point of view, I want to make sure my clients, I have an annual meeting with my clients. I'm saying I'm reviewing this. He probably has already figured, my clients have even figured out, well, the Unified Credit now surpasses my need for the death benefit that I had in my original strategy. What could I do with this? I think the advisor wants to always have the option to meet in an annual and give him all the alternatives to a client. So we can, just lay it out.
By the way, generally there's no cost to finding out what the value of your policy is. So it's worth it for them to do. The cost gets taken on by the broker, generally. So it's worth it for the client to see what the policy is worth. There's no cost, there's no obligation. He doesn't have to sell it, even if there is an offer. So it's worth it for them to do as an exercise, at least every year.
I kind of like finding out. I just want to know my possibilities here, because I already know what my cash surrender value is to my beneficiaries if it's in a trust, or direct to me if I own it within my estate. I just want to know what that number is. And I think this is a great reason to get in front of your clients. An annual review, and I'm looking at a contract that may not have the same purposes any longer. I want to review that and look at the possibilities of selling it.
And this is really the most logical time, in view of the recession of 08 and 09. Things have improved, but only moderately. And even people who were at once wealthy, at one time wealthy, may be facing more difficult circumstances, may be under some sort of financial stress. It's another sort of added reason to take a look at these things. People may be, really interested in gaining liquidity for today's use as opposed to waiting for a death benefit.
The worst thing you could do is just put your policy back to the insurance company for the surrender value without exploring what the value might be in the secondary market and the life settlement market. That's the worst thing you could do.
Well, I like all the options, and I want to be able to present it to my client. When we come back from the break, we're going to continue on some of the laws and regs that I want you to make sure that you're up to speed, so you can look at this as a market that could be used for your benefit and your client's benefit. We'll be right back in about 30 seconds. Back in the day, life insurance professionals were called field underwriters. Then, carriers trained their field force in the basics of life insurance underwriting. Today, the insurance industry doesn't educate the agent population as they once did. But now you can have the Informed Risk Guide at your fingertips, so you can illustrate a reasonable rate class for your life insurance prospects. Just request your copy of the Informed Risk Guide at downtobusiness.ashbrokerage.com. It's free from Ash Brokerage, the practice enhancement company. Well, welcome back to our second segment. Guys, either one. I'm kind of interested, I know we have to there's new laws that have come online, there's new regulations, we want to salute the flag, of course. I want to know, what do I have to disclose to my client when I'm talking about settlements? What is the disclosure? What do I have to caveat?
Well, first of all, every state is different. I mean, there were earlier states. For instance, we're a New Jersey corporation. Our home state is New Jersey. New Jersey has an older law. It might have been 2004, 2005. I don't recall exactly. The disclosures there are less and less onerous. But generally, there are, in addition to sort of licensing requirements, licensing of a provider, licensing of a broker, many states require, let's say, a pamphlet on life settlements to be given out, a pamphlet that was produced by NAIC, or their own pamphlets. Some of the disclosures relate to, jeopardizing perhaps some governmental benefits if you get a lump sum payment, that there are alternatives, and naturally, you have accelerated death benefits. If you are, close to death, you might have an alternative in the policy itself. Naturally, if it came to us and we saw an accelerated death benefit that pertained, we would tell them. But these are written things in the law. There's probably 20 or 30 these types of disclosures that are required to be given to the viator or to the possible seller.
So when I go ahead and I disclose this and I walk through this, is this something that if our audience says, I'd like to see that and see an example of that, you could provide?
Oh, absolutely. It's standard form.
And then in talking about standard forms, are there basic forms? Now, I talked about this yesterday. What do I need? I need annual statement. I need enforced ledger. I need the policy so I can look at the back of the application. I'm going to try to get all the APS, collect all that information, try to get all that done. Is there anything else I'm looking for as far as collection for data? I'm going to hand them a disclosure. The client's off now. They're happy. What do I need as an advisor so I can have a full file?
Well, like you said, you need an illustration. Having an annual statement would be fantastic. Having a verification of coverage, which is a form that the carrier provides that tells you all about the policy, whether the policy is still contestable, how much cash value there is, what the cost of insurance is. That would be super. That really saves time because a lot of mistakes are made, and a lot of that information can be found on the verification of coverage.
So that's actually, it sounds like that could be a big preamble to a collection of everything.
Absolutely.
Getting that first.
Absolutely.
Well, Alex, go ahead.
Usually the broker takes care of obtaining that.
Alex, when I remembered something yesterday you talked about that fits into our show today. The provider's done. He's made his offer. The offer has been accepted. Now they have to go through a gauntlet. Sounds like some of a gauntlet. You tell me of a due diligence process.
There is a due diligence process. First of all, there are contracts that are required to be signed. the insured has got to sign in many places an initial. The viator or the seller the policy owner has to sign, and the signatures have to be correct, and they have to be in the right places. And then we have, I mean, you can help me, Erez, but there are beneficiaries that have to sign. Sometimes they, as the process envelops or develops, you see more signatures required. They see a trust, and perhaps, some funders may want the beneficiaries of the trust to sign. So it's go ahead.
Yeah, the funder wants to make sure they have ownership of that policy, and they want to make sure that nobody can come back to them and take that policy away from them after they buy that policy. They're also concerned about fraud. They want to make sure that that policy was obtained rightfully, that the client didn't lie in the application about their medical history. They want to make sure that the client is providing the right medical information from the doctor. So sometimes they go back and they actually order the medical records directly from the doctor themselves.
This is all part of the due care process, due diligence process.
And we find, honestly, we find that sometimes certain providers, funders, maybe go overboard a little bit, takes up a little bit too much time. And this is why I'm constantly advising advisors to make sure that their clients have a reasonable expectation as to how long this is going to take. And advisors, they get very antsy about the timing because their clients are bothering them perpetually. So it's the most important thing for client control and for making this an easier process is to warn them in advance. We don't know how long this is going to take. It may take a lot longer than you expect. Please be patient.
Well, when I think about this as a huge opportunity for advisors and their clients to look at another option, especially with the market being so low on inventory, I think this is something we really need to do a little bit of due diligence ourselves to make sure, hey, that our clients are having options here. Well, that's all the time we have for today's show. Remember, before moving forward with any of the ideas you hear on our show, always consult your tax advisor, legal counsel, or your broker-dealer compliance officer. Missed an episode? You can view any of our episodes at downtobusiness.ashbrokerage.com. And remember, you could be wiser as an Ash Brokerage advisor. I'm Steve Savant. I'll see you tomorrow.